On behalf of AU Bank, I extend a very warm welcome to all for our Q2 earnings call. We have with us today from AU Bank, Mr. Sanjay Agrawal, MD and CEO, Mr. Uttam Tibrewal, Executive Director, and Mr. Deepak Jain, our CFO. We also have on the call with us other members of our management team, including Mr. Rishi Dhariwal, Head of SBL and Collections for Retail Bank, Mr. Bhaskar Karkera, Chief of Wheels, Mr. Yogesh Jain, Group Head, Wholesale Liabilities, Fixed Income and Treasury, Mr. Dayakaran Sridhar, Chief of Digital Banking and Digital Strategy, Mr. Shantanu Prasad, Chief Treasury Officer, Mr. Pankaj Sharma, Chief of SBL, Mr. Vivek Tripathi, Chief of Small and Mid Corporate Lending. From the branch banking, we have Mr. Sumit Pradhan, Chief of Branch Banking, Mr. Shurveer Shekhawat, National Business Manager, Current Account, Mr. Pramod Khetawat, Chief of Product, and Mr. Vimal Jain, Chief of Accounts, and Mr. Mayank Markande, our Chief Risk Officer. Besides, I also have my colleague Hemant on the call with me. We will begin this call with the opening remarks, following which we will have the floor open for your questions. Before we begin, I would like to point out that certain statements made in today's discussion may be forward-looking nature, and a note to that effect was stated in the earnings call invite sent to you earlier. We trust you would have received the documents covering the Q2 FY19 financial performance and would have gone through the same. To begin with the first half and Q2 financial highlights, last quarter, CRISIL upgraded our long-term rating to CRISIL AA- stable from CRISIL A positive on 3rd October. Short-term ratings were reaffirmed at CRISIL A1+. I'd like to clarify that on the regulatory part with respect to promoter contribution, ownership, structure, listing, related guidelines of RBI for small finance banks, we are fully compliant and there is no pendency with RBI. With respect to non-promoter shareholding requirements, as all of us are aware, Warburg Pincus has already brought down its holding from 15% to 7% ahead of the cutoff timeline of October 18. Last quarter, we strengthened our leadership and onboarded experienced professionals in key positions, including, as I mentioned earlier, our Chief Treasury Officer, a Chief of Digital Bank and Digital Strategy, Chief of Payments, and National Credit Manager for Housing. Now coming over to the business numbers. While we have covered them in detail in our press release and our presentation, I would like to quickly summarize some of the key highlights for you. Our loan asset under management grew 66% to 20,200 crores as on 30th September. First half disbursements grew 74% and crossed 7,000 crores. We continue to be a retail asset-led bank, and our retail assets grew at a healthy pace of 58%, crossing the 16,000 crore AUM mark and forming 80% of our loans AUM. Within retail assets, secured business loans MSME grew 68%, followed by Wheels growing at 48%. Alongside growth, we also maintained robust asset quality. We reported a GNPA of 2% and net NPA of 1.3% as on September 30th. On the branch banking front, this time around we have tried to give additional color. Our key priorities or our branches are currently focused on mobilizing deposits, third-party distribution, building new fee pools, cross-selling, and financial inclusion. We maintained our momentum in building deposit base as we touched deposit base of nearly 13,000 crores, which comprises of around 10,800 crores of branch deposits and about 2,071 crores of CDs. Our CASA grew from 645 crores to 2,802 crores in the last 1 year, enabling us to maintain a CASA of 26%. We are seeing strong growth potential on our insurance distribution with life insurance business, general insurance business, and health insurance business. And we also saw mutual fund. We also did mutual fund business of 32 crores. On building new people at the branch banking, we had a good start on the trade and remittances side with the business of about 51 crores. Till date, on the trade FX side and for the merchant acquisition, we have installed 852 POS machines. On the cross-sell front, within the bank, the liability team did gold loans worth 29 crores from branches without any additional field force. For all products put together, branches did a cross-sell of more than 300 crores in the first half. On the financial inclusion front, we've opened more than 9,000 accounts in the unbanked areas in Q2. We've also appointed 16 business correspondent agents to deepen our reach. Moving over to our yields and some of the P&L numbers, we maintained an AUM IRR of 14.2% and our cost of fund was 7.8%. Our net interest income grew to 601 crore in first half FY19, up 51% over same period last year. Other income also grew by 53% to 148 crores in the first half. Cost to income ratio was 60.7% in the first half, with a marginal improvement in the second quarter as compared to the cost to income ratio of Q1 of FY19. We reported a PAT of 168 crores for the first half and 91 crores for the second quarter, which is a growth of around 30 to 34% respectively. ROA for the second quarter and for the first half was 1.6% and ROE at 12.9% for the first half of FY19. Our capital adequacy was 17.8% as on 30th September, which comprises of Tier 1 capital of 17.2%. As all of us know, reported capital adequacy does not include PAT for the first half of FY19. If you include PAT, the capital adequacy actually translates to closer to 19%. We have been maintaining adequate liquidity cushion of more than 10% of our deposits and borrowings at all times. As on 8 October 2018, we had liquidity of 2,600 crores, which along with available undrawn bank lines and refinance of 750 to 1,000 crores, which is around 15% of our external liabilities. And this is in addition to the SLR and CRR investments that we have at the bank. This concludes our opening remark. Now, we'd like to take your questions and our management is here to respond to you. Thank you.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Thank you. The first question is from the line of Monica Agarwal from Bernstein. Please go ahead.
Hello.
Yeah, hi.
Yeah, hi. So my question was, I just wanted to clarify, so did we sold any PSLC this quarter?
Yogesh, our Chief Treasury Officer, will able to reply you.
Hi, Monica. So,
yeah, hi.
This quarter we have sold not big amount because we have 75% our requirement. So last year we had no PSL requirements, but this time we have to maintain 75% PSL. So we are maintaining that amount. So we have not sold much amount in this quarter.
Okay, so we don't have much of PSLC book left enough to sell in the market, right?
So I think we have to assess Q on Q basis. So we'll see whatever excess we have in, like in first quarter we sold good amount. So again we will assess in third quarter and fourth quarter what excess amount we have and accordingly we'll decide what we have to issue as PSL.
Okay.
Additional point, Monica, over here is that in the first quarter, like Yogesh mentioned, that we had sold PSL worth around 4,700 crores and of total income of 43 crores was made on that. In this quarter, we have recognized 12 crores out of that.
Okay. 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 My second question is on our loan book to NBFCs. So I see there has been a significant jump in the ticket size and a 10 bps decline in our disbursement IRR during the quarter. So if you could, explain where is it coming from and how's the exposure like during the quarter?
So, Monica, NBFC as a book is our focus area, right? And we have around a book of around 2,500 crore with a customer around 225 plus, 125 plus, sorry. So the ticket size has not gone up, right? The average ticket still would be, Hemant, do you have the data? Yeah. So I don't know where the data is coming, but
13 crores.
13 crores, right? The average ticket is 13 crores. For NBFC lending, 13 crore is not much of bigger ticket size. And we generally lend a long term, right? As a bank, our 2,000 crore is on the long term lines. You know, it's a 3-year line or maybe CC limit. So it's not a short term. So whatever challenge we are seeing in the market is about borrow short term and lend long term. So our book is stable. You know, there is nil NPA. You know, we haven't have any, nil overdue. Leave apart NPAs, nil overdue actually. And also we don't have any exposure, so-called names which are in the news. We don't have any exposure to any of the companies. So it's largely AFCs, SFCs, you know. So it's a mix of across country, across product, across the sectors.
Okay, and the reason for 10 bps decline in the disbursement IRR?
It's not much, 10 bps. There was a lot of competition in first and second quarter among lending, as such also. So I think 10 basis point dip is not much to be, significantly gives us, right?
Okay.
Yeah, so basically, Monica, if you will see the numbers which we have given, the yield for NBFC is 11.1. There is a color coding error which we have corrected. So 11.1 is maintained. Okay. And whatever in last few days there has been rise in interest rate. So you will see that in the next quarter, some bit of it coming in.
So impact will come in coming quarters, I believe. So.
Okay. So any increase will. Yeah. Hello.
Yeah. Please.
Vivek, please go ahead, Vivek.
Yeah, so I take care of small and mid corporate lending. Just to give you color on this, there is no drop in the IRR as such because so we, when we say it's only the coupon, which is generally plotted here, so there is a fee component as well. The fee, when you include the fee component, the IRR has gone up actually.
Okay, including the fee component, IRR has gone up.
Yeah.
Okay. So just last one clarification. So I believe on slide 18, wherein we disclose the ticket size-wise distribution. So for small business lending, I believe there is some typo error wherein we try to classify or distribute our loan book across the various ticket size.
Yeah, lakh to 1 crore is 60%. 10 is, typographical error. So the revised presentation in our website, it has been corrected.
Okay, great. Thank you so much. That's all from my side.
Thank you. The next question is from the line of Prakash Kapadia from Anived Portfolio Managers. Please go ahead. Ladies and gentlemen, we are experiencing an audio disturbance from the participant line, so we move to the next question. That's from the line of Nitin Agarwal. That is from Motilal Oswal. Please go ahead. Nitin Agarwal from Motilal Oswal, please go ahead with your question.
Hello. Yeah, hi everyone. Am I audible?
Yes, you are. Thank you.
Yeah. So firstly, what is the outlook on margins, particularly as our disbursement IRR continues to remain lower than the IRR on outstanding AUMs? And this is I see this across many business segments. So are we not looking to increase our lending rates in the current rate environment?
Yeah, Nitin, Sanjay Agarwal this side. So seeing the current scenario, we have also looking to hike our rates, and which we have already done from 1st of October. And so the effect will be seen from this quarter onwards. But overall as a bank, generally people expect that, you have to price the risk, and price the whole segment accordingly if the market allows you. So much of options was not there in first 2 quarters. And there were a lot of competition also. But I think now onwards, because of this liquidity issue, the interest rates are is getting not. So I hope that we can able to pass on to something to customers from here on. So we believe that there should be an increase in rates as we move forward.
And Nitin, if you will observe, our disbursement IRR for retail, which is 80% of the portfolio, has increased from 14.3% in first quarter to 14.5% in second quarter. Even for, non-retail, which is small and mid-corporate, it has increased from 11.4 to 11.5.
So, do we think the margins should hold on at the current levels now?
Should be, but cost of funds will also go up. But we firmly believe that we can actually transfer most of the cost to the customer. So that scope and that space is now available. So hopefully we should hold our NIM with the same level.
Okay.
Maybe we can little bit improved.
Okay. And so secondly, on the network side, we have added 570 employees. Our branch count has been flat this quarter. So what is the strategy on network expansion here on and the outlook on cost income ratio?
So branch, we have taken our own time to understand the whole requirement of branches, is brick and mortar model, the alternative distribution channels, and we just are now 18-month-old organization as such, right? So a lot of internal discussion is going on to expand our distribution through brick and mortar, through BCs and whatever way we can do, even digital. So we have applied for a permission because as a SFB we need to apply and take a prior approval from RBI to open any branch. So we have applied to an RBI in this quarter only. So once we get that approval, then we'll I think inform you guys that how we want to expand our distribution network as we move forward. And regarding OPEX, Nitin, we are around 60% of total income, right? And we are looking to build a digital bank. We are looking to build more distribution network. We are looking to build a decent IT framework in organization to run a very seamless and comfortable environment for a customer. So it will require a lot of investment. So I personally believe that OPEX, if it's around 55 to 60 range in next 18 months, we should be more comfortable because we need to settle this bank for years to come.
Right. And lastly, in the SME segment, wherein our NPL ratios have been running high, so what kind of collateralization levels do we have there? And are we seeing any concerns on the value of the collateral?
So, Rishi?
Yeah, hi, Nitin. Rishi Dhariwal here. So in terms of collateralization, we are more than adequately covered on the collateral. And we've not really seen any significant fall in the values of the collateral that we are holding. So to give you some more flavor, I can say that while there is a bit of deterioration which has happened in the first half, it is also to be seen in the perspective of overall some recoveries that we've done. So while there is an increase in the gross NPA number for the SME segment, we have also recovered close to 8.5 crores from this segment in terms of closing certain accounts. So it is not that the number is only static. There is some churn back also of these loans where 8.5 crores of loans have been closed.
Right. Okay. Thanks so much.
Right.
Thank you. The next question is from the line of Prem Thakkar from Unilisa Ventures. Please go ahead.
Yeah. Hi, sir. I have two questions. The first one was on the capital burn. You can see that quarter on quarter, our capital has, Tier 1 has declined by about 290 basis points. So I wanted to understand that.
Yeah, so capital is a function of a growth, right? So I think we are, as a team, is thinking to raise now Tier 2 because June quarter we got Temasek money, which is around 475 crores, and the second tranche of that money will come in December 19. So from here to next 18 months, without tier 1, we have two options. One, either raise tier 2, and second, our internal accrual, right? So we believe that for next 12 to 18 months, we will raise tier 2, and that will be good enough for us to manage our capital adequacy. And subsequently, if needed, we have invested in a VAS, so that asset can be also be monetized to get the equity.
And Prem, just to mention, which I mentioned at the start of the call as well, that when you calculate capital adequacy in between the financial year, the profits of the quarters are not really added. So if you factor that in, which will be done at the end of the fourth quarter, as of now, at the end of the first half, the capital adequacy stands close to about 19%, but you can't include that because that's not what...
Our capital is funded wholly by tier 1. So our capital adequacy is 17.7. Out of that, 17.2 is tier 1.
Got
so there is enough scope and space available to raise tier 2.
But sir, any target mix on tier 1, tier 2?
So largely we want to be, around 12 tier 1 and 6 tier 2. We should not go below 18%, but that's why I'm saying we want to raise more tier 2 now.
Okay. Got it. And the next question was the bookkeeping question. We have this item called OD against FD, wherein our AUM outstanding has increased from 111 crores to 514 crores quarter on quarter. But the disbursement number was showing only 241 crores. So just wanted to clarify that.
I'm sorry, does anybody have an answer to this question? So he's saying that the...
Can you repeat your question?
So we have this OD against FD. Its AUM has increased from 111 crores to 514 crores in Q2 2019. This is quarter-on-quarter increase. But the disbursement number in Q2 2019 is showing 241 crores. So this is much lower number.
The AUM has gone up without disbursement.
Yeah.
Disbursement amount must be more than.
We'll check and get back on this.
Pramod can, I think, clarify. Yeah. So basically, this is the AUM number. So disbursement in the first quarter was higher to that number, and the utilization was 111 crores only. In second quarter, the utilization increased, and the disbursement number was 281 crores.
So I think the answer is this, that, the quarter 1 disbursement never happened, right? So there was unused limit, which was, so it got used in quarter 2.
Okay. But then you do not show that in disbursement.
So disbursement of quarter 1 would have been that way, no?
So basically what happened, disbursement, we showed what amount has been disbursed. Okay, there is certain limit. So the sanction limit was higher, disbursement amount was lower in the quarter 1, and the difference between the two got utilized in second quarter.
Okay. Got it.
There would be a case where in quarter 2 also the sanction would be more and disbursement would be less. So the effect of that can come in the next quarter, right? So then the AUM can go up.
Okay, so this 514 crore, it includes the sanction amounts.
Sanction amount done in quarter 1, but disbursed the limit used in quarter 2.
So 514 is amount disbursed, utilized, basically what is outstanding.
That's fine. Yeah.
Okay, got it. Sir, just one last question. We have recently started two-wheelers financing, and we have pretty good yields there, around 23-24%, and a lot of NBFCs are competing in that space. So just wanted to understand what kind of product we have, what are our turnaround times, what is our processing fee, if you can just highlight that.
Uttam, can you reply this?
Yeah, Mr. Thakkar. So we have started two-wheeler. So as you know that we have a customer base of 10 lakh customers. Whatever disbursement I am doing, out of that 50 to 60% is to my existing customers. So I'm leveraging my existing customers. They have taken SMEs or vehicle from me. Now they are taking two-wheelers, which is STP process for me. We have built a STP tech process into this. There is no manual intervention into this. Minimal is there because my guys are at the dealership and my tech is through STP. And as you asked, my fees is around 3%, 3 to 4%, and IRR is 23-24%. So largely focusing on existing customers and leveraging my branch networks, which is through deeper penetration of our geography.
Okay, so not looking at going to dealers and like that.
So we are also approaching dealers. That's not a problem. But as I said, 60% is existing and 40% is new to bank. So we are going to dealers also. Yeah.
And what is that turnaround time?
Turnaround time is depends from 1 hour to 4 hours.
1 hour to 4 hours. Okay.
Yeah.
Got it. Great. Thanks a lot, sir.
Thank you. The next question is from the line of Qtr2 from ICICI Securities. Please go ahead.
Hello. Yeah, thanks for taking my question. So first of all, thank you for such a detailed disclosure. I had a theoretical question. So if I'm not wrong, starting this quarter, we have started including money market term lending done by the treasury function in our computation of gross AUM. Just wanted to understand what is the rationale behind doing that?
So basically it is a term loan, so it is categorized under advances in our financials, right?
So it's a statutory definition actually which has to be complied by us by including in the loan assets. In my opinion, it should be a treasury assets, but any loan given to a bank more than 15 days.
So call and notice they include in balance with banks, but more than 15 days, some money we have to put in advance as per regulatory requirement.
Yeah.
So sir, right now if we see this money market term lending in the balance sheet, is it sitting in our investments now?
So if lesser than 15 days is sitting in the investment, but if it's in more than 15 days sitting on the loan asset, which is around 225 crores.
Okay, all right. Thank you so much. And the second one is more of a bookkeeping question. In the secured business loan segment, we disbursed around 870 crores this quarter. Can I have a split between the MSME and the SME segment?
Yeah, 1 minute.
MSME
is 829 crores and SME is 43 crores.
All right. Thank you so much. That's all from my side, and all the best for the rest of the financial year.
Yeah, thank you.
Thank you. Reminder to all the participants, if you wish to ask a question, you may press star and 1 on your touchtone telephone. The next question is from the line of Prakash Kapadia from Anived Portfolio Managers. Please go ahead.
Yeah, thanks for taking my question. I had two questions. If you could give us some color on the 54 crore breakup of the other income on the third party and cross-sell. What exactly is this? What kind of trend we are seeing? And secondly, on the SME side, the GNPA is 8.4% and last few quarters it's been around that 800 crore kind of a range. So what trends and what is the outlook on the SME side?
So, Rishi, can you answer the second question first, about SME asset quality?
Yeah. So on the SME asset quality, as I said earlier also, we've not really been growing that book much because we've been in the process of sort of taking corrective actions on that book. Having said which, yes, there has been some slippage during this financial year also, and 27 crore odd of customers, which is across, I think, 14 customers odd, they have sort of rolled forward and become fresh NPA. But we've seen 8.6 crores of closures also, which we have closed. In addition to that, what I can say is that we've also got a significant number of accounts which we have rolled below 90 DPD, but we continue to report them as NPAs because we would want those customers to get seasoned and demonstrate, good performance before we remove them from an NPA list. And that itself is it's a decent part of the gross NPA number.
Okay. And this, stress which we are seeing, is it across the country or is it some specific geography? Is it there in Rajasthan also, which is our key market, or this is across?
So the stress is mainly in MP, Rajkot to be specific, and Delhi. So these are the only three markets, Indore, Rajkot and Delhi, where we have stress. Rajasthan, we really don't have any significant delinquencies in this portfolio.
Okay. And what would you...
Sorry.
Yeah.
Sorry. Please go ahead.
Yeah. I'm saying what would give you confidence to give the book once these, accounts get normalized, or what is the plan on the SME side from a growth perspective? Once we stabilize this, say, next quarter.
No, so SME is not our focus area, to be very honest, because, RBI has given us two mandates. One is 50% loan book has to be lesser than 25 lakh, and second, our priority sector is around 75%, right? So both the guiding principles, push us actually towards to do more and more small loans. And SME, this book is very old book. It was done in our NBFC heydays. And as we move forward, the idea is to focus more on MSME, right? And as MSME, grow the ticket size rather than look for a big ticket of 5 to 10 crores. Rather than, either way, look for to build from 50, 60, 80 to 1 crore. So the strategy is to increase the MSME loan ticket, and rather than looking for a straight to high ticket loan. And I hope we will continue with this. And that is why our AUM of SMEs is very static, right? We are not neither growing it. So, and that is why the NPA levels always look elevated.
Understood.
Just to add here, as you know that in Q2 we have disbursed only 43 crores, and our AUM has decreased from Q1 to Q2 in SME. That's why this percentage also looks higher. Rather, it decreased by around 862 to 819. So it's a 40 crores around. We have foreclosure of 3-4 foreclosure and all that. We have to do that. 10 crore case in Quarrier also slump.
Yeah. So Vimal, on the other income color.
Yeah. So about the other income, 54 crore, we earned around 20 crore from the training given to the other companies, and marketing support and distribution income 25 crore. And other.
I didn't understand this. Sorry, can you please repeat this?
So this is more of a distribution income where we allow insurance companies and other companies to display their product on our branches. So we charge fees for them, right?
Right.
So that is around 20 crores.
Okay.
Yeah.
And
the balance would be?
Balance is related to training provided to the other companies and the trainer, around 20 crore. And rest are third party.
40 crore is for this. 40 crore is for all this put together, right?
Yes, 40 crore.
So these are what smaller companies in specific regions where we...
I think it's more of it to insurance companies, mutual funds, who actually cross-sell product from our branches, is that income. Yeah.
Understood. I'll come back if I have more questions. Thank you.
Yeah.
Thank you. The next question is from the line of Pankaj Kumar, an individual investor. Please go ahead.
Am I audible?
Yeah.
I have actually 3 questions. First one is there any plan to enter into the credit card business in medium to in the next 2 to 3 years? And secondly, do you plan to target these apartment societies, mostly in tier 1 and tier 2 cities, where they have very high deposit base from the maintenance in terms of maintenance, and they have like some of the societies in which we are staying, they have like 30-40 crores of budget annually.
So do you have like HDFC targeting those societies for deposit base and for payments also? So do you have any plan like that? And thirdly, I see that loan book is mostly into the wheels segment. So is there any focus area? How do you plan to diversify these loans, or going forward the focus will continue to be on the wheels segment?
Yeah. So I think the first question about credit card, sure, we are looking for to build this, program, but credit card is a very niche kind of product and it requires a lot of expertise to understand customer, because in a different way, this is also an unsecured lending to a customer. So I think not our balance sheet, to be very honest, initially, but we can do some cross-sell arrangement with some existing player. And as we learn and as we get some experience, maybe in next 2 to 3 years, we launch our own card. But definitely as a bank, we need to launch our own card, but I think it will take some time. Second, about your society is a task business, which we already started focusing in. All our regional heads have a different target to meet this task business, and it's not easy to go there because it's a very it comes with a lot of responsibility, a lot of demand also. But we are trying to get enrolled. HDFC Bank is an old player, so they have better advantage to us. But we are really focused, and through our value proposition, different value proposition, we are attracting those money, and we still got some decent. Sumit, what is the amount?
So for some of the residential societies, like you mentioned in Mumbai, we've already had some success around it. Even in some residential societies in Gurgaon, we got some money from those societies also. Like Mr. Agarwal mentioned, it's a difficult segment to be a part of. But the aggressive approach in these societies, a lot of micro-marketing activities, and of course the rate of interest, which is quite an attractive one for some of these deposits. We've already made some success in these society accounts.
So our book is around 400 crores. The book is also around 400 crores. So, and what was the last question?
Retail book is more seems to focus around wheels.
So wheels we have done for last 20 years, and I think this is one of the best time to be in the wheel business. We are just 8,000 crores as a book, and we believe that in next 3 years or maybe 42 months in our next journey of growth, we would be looking to build this book to a decent size. But MSME, SME, housing loan, consumer durable, two-wheeler, business banking, all these are shaping up well. So, and they will have enough cake and size in years to come to demonstrate that we have very widely and a diversified book in place.
Thank you. Thank you so much.
Thank you. The next question is from the line of Nidesh Jain from Investec Capital. Please go ahead.
There are two questions from my side. One is, given the situation at the NBFC level, where it seems like the cost of funding may go up, and in the segments that you are operating, you are mostly competing with NBFCs. So do you think growth for you will further accelerate from here onwards, and margins should improve from here onwards, because our cost of funding will not increase as much as the cost of funding increase which will be seen by NBFCs?
Yeah, I think you are spot on, because I also personally believe that in this kind of scenario, money chase bank actually. So, and we have got a lot of traction in last 2 weeks. So liquidity issue is not there. Of course, because of overall environment, the cost has gone up by 20-30 basis points, but for the NBFC and HFCs has gone up by maybe 200 basis points. So our positioning to deliver money is still intact, and because of their money going so high, they are not able to price their assets. So that market should come to us, and that is why I was saying in my previous answer that as we move forward, we can transit some cost to customer, which our growth rate can be, different from last 6 months, and our margins can also get improved, So this is how we are forecasting our next maybe a quarter or so, and then we'll see how we want to move further.
And on the ground level, are you seeing lower competitive intensity from NBFCs right now, or it's too early to?
Very early days, but a lot of call has come to get the money. And money is not cheap actually. So I think it will have its own effect, because when money is not cheap, and if the cost gone by 200 basis point, and then how you can price your asset around 12-13%, right? So I think many of the NBFCs, HFC has to figure out their business model, but I think in that sense, we are better placed.
And secondly, with respect to housing finance, any plans to enter into housing finance? What are the timelines?
So we already started. So we already made a book of around 8 crores. And it got started in April this year. And still early days, but we know this market, we know how to operate, we know how to operate in unserved and unreached markets. So it's a matter of time when the size comes to us. And seeing this environment, I think it's good to be there, it's good to be there in this kind of markets. But we want to be very important player under housing segment.
So from a target segment perspective, it will be very similar to your MSME loans target?
Yeah. I think, as you know, you always want to price the risk, and we are very, ROA concerned organization. So we want to be in those markets where we can have a decent ROA. So eventually we want to be unserved, unreached, kind of markets where MSME and the similar book is still.
Thank you, sir. That's from my side.
Thank you. Reminder to all the participants, if you wish to ask a question, you may press star and 1 on your touchtone telephone. The next question is from the line of Pranav Gupta from Aditya Birla Sun Life. Please go ahead.
Hello. Yeah, am I audible?
Yes, you are. Please go ahead.
Yeah, so I have 2 questions. Firstly, your securitization or off-book AUM is consistently going down. So, what is the strategy on that front, and how does it look going forward from here?
Yeah, so our cost of deposits is around 7%. Mm-hmm. And securitization happening is around 8%. So there is no sense of doing securitization. And we have the alternative method like PSLC. So I think Yogesh...
So I think it depends on our requirement. So because we are getting enough deposit in terms of our liquidity requirement, so that is why we have not done much securitization. And
right.
As a bank, we got alternate resource, what Sanjay ji told, that we got PSLCs, what we have done in first quarter also. So we'll see the position, what we have to do, but as of now, in terms of liquidity, we are quite comfortable. So we'll assess Q on Q basis, and whenever we will see that we have to go for securitization, we'll go. Because again, we have to maintain 75% our own PSL targets also.
Correct. Okay. Okay, and the second question is, so how do you see the freight rates moving in terms of profitability for small and large truck operators? How is it moving? And, considering that you guys have such a meaningful wheels book, what is your sense?
Bhaskar, our chief of wheels will apply this.
Yeah.
If you see our book, the M&HCV is a very, very small portion, and the freight and whenever the diesel price goes up, the first one who gets impacted the most is mostly the M&HCVs, because obviously the mileage per liter is less on that. Whereas the small commercial vehicles, the one which do the secondary and the tertiary connectivity, they do not get directly so significantly impacted because the cost of running is a little more moderated. Having said that, when the M&HCV does get affected, there is a pass-on lag effect of about 5 to 6 months till the time it reaches the small commercial vehicles, which is where we are. At this point in time, they are able to pass on the cost to the customers, and customers are paying. So, yet not the kind of a situation that happened about 3-4 years back in terms of, freight and return mismatch as we speak. So, at this point in time, looks in control so far, as far as our book is concerned. And that, again, is a small piece, because in our commercial business, we also have cars commercial. So, it's not all commercial passenger the way you think. It's not just load, but it's also passenger. So it is pretty evenly distributed.
Okay.
So far it's controlled, yes.
Okay, great. And just one last data keeping question. Could you give us the breakup of term deposits with retail and wholesale?
Term deposits, the retail and the wholesale.
Yeah.
So basically, broadly, it is around 30% retail.
Yeah, so 30% retail out of this 70% of wholesale, 50% of that is non-callable.
Okay. Okay.
Largely, our 70% book of TD is either retail or either non-callable. So we don't have liquidity or, any kind of issue because of that.
Okay, sure. Thank you so much.
This is other than CASA.
Yeah, right. I got that. Sure. Thank you.
Thank you. Participants, to ask a question, you may press star and 1 on your touchtone telephone. The next question is from the line of Vaibhav Agarwal, an individual investor. Please go ahead.
Hi, thanks for taking my question. I just have 3 numbers that I want for FY19 and 20. What is the kind of growth, ROA and ROE that we can expect from it?
For March 19?
For March 19 and March 20.
So March 19, I think we are already,
PAT of 1.
So PAT of this year we are 168, right? So we want, we would like that, the profit should grow by at least 30%, but on a safer side, it won't go down below 25% on a last year basis. And in terms of asset, the growth can happen around 50%, deposit can grow by 100%, and so overall bank is shaping up very well, right? So depending on that, I think the future call of FY20 is still a large call for us, so let us cover this 6 months first, and then we'll try to comment on next year performance.
Sure. Okay, thank you.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand the conference over to Mr. Sunil Parnami for his closing comments. Over to you, sir.
So thank you everyone for your time, and we look forward to interacting with you the next quarter.